One of the main stories that everyone cares about right now is the inflation problem in the Philippines. How does that affect what you do the most? What's the biggest problem that's caused you?
Well, we see the inflation as right now as transitory.
Okay.
It's because of a host of factors like oil prices, world crude prices increased significantly. We estimate that the contribution of train, which they are blaming the train,
that's the tax reform.
The tax reform program is only 0.4%. In other words, given our forecast of 2 to 4%, you can add 0.4, so it's 2.4 to 4.4 given the train. Because there are other factors, as I said, world crude prices, price of pork has gone up significantly. And
there's the rice issue as well.
Now you can blame that to the crisis in swine flu.
Yeah, the swine flu problem in China.
And of course, we can blame also our own National Food Authority.
Right.
They had 4.6 million sacks in the warehouse and they did not release it on time. They have the money to buy rice, they did not do it. So also that's a factor.
So lots of elements, obviously, to the inflation basket. You mentioned the train law, that's the tax reform plan. So do I guess then, because it's such a small contributor, Mr. Diokno, here to the inflation basket, you're not rethinking of the implementation of that or putting that aside or pushing that forward, as some people have advocated might be a good solution?
No, because it is a structural reform. The last tax reform that we did was 30 years ago.
Okay.
So we need it to make the tax system fairer, simpler, and more competitive with our ASEAN neighbors. So you don't desert that. You don't give it up to solve a transitory problem. It's just like using sledgehammer to kill a fly. Okay?
Right.
So we're not going to sacrifice that.
Do you think the peso is too weak? Because you mentioned oil prices at $80 a barrel. You import that with a peso that's at 54, 55. That's going to be expensive. I mean, how is the government explaining the weak currency to investors?
We look at the peso. It's actually the depreciation of the peso is like global. We compare ourselves with our competitors like India and maybe Indonesia. And we're in terms of depreciation, we're the third. India is the biggest.
But one would point out, as it pertains to the problem in the Philippines, perhaps the impact of that is bigger because you have an inflation issue.
No, people are making a big deal of the inflation. I look at the data, right? Sure. Highest was during the time of Mrs. Marcos, Mr. Marcos, of course. Right?
Okay.
Around 50% inflation.
Right.
Okay.
Oh, so you're looking at the data. Okay, you have the data there with you.
I have the data with me. Time of Mrs. Aquino, 21.2%. That's in August of 1991.
But we can't compare decades back because
but even
inflation rates then and real rates were very different in the 70s and 80s. You had the OPEC embargo, you had deposit rates in banks. It's not an apples-to-apples comparison, is it?
No. But you used a series of data, like Fidel Ramos, 13.9. That's the peak. Joseph Estrada, 10.7. Most recent, GMA.
Right.
Gloria Arroyo, 10.5. Under Benigno Aquino, 5.2. So this 6.4 is really nothing out of the ordinary. We've seen worse situations before. And as I said, admittedly, there's an impact of the train or the tax reform on prices. But there are a host of other factors, like the price of oil. It used to be $30 per barrel in the world market. It's now close to 80.
So I guess what investors want to know, and this week we had another failed auction on 10-year debt. What investors want to know is, are you confident that the measures already put in place since the summer, you add the rate hikes in there as well, some of the things that were announced this week, do you think that will contain the problem?
We have a host of measures that we have announced, like release the rice. And we are expecting more importation. And plus, we're facing the harvest season pretty soon, and so that will solve the problem. Our forecast is that inflation will peak on the third quarter, which is about this time. Will taper off in the fourth quarter, and we'll be back to 2.2 to 4% in 2019. And
are you seeing inflationary pressures? I'm curious on parts of the budget that tends to have inflationary pressures there as well.
I'm not saying this. But in general, the impact on the budget is positive on inflation. Because
in what way?
That will increase our revenues. But we cannot we cannot spend more than what Congress has authorized us to spend. So constant, expenditure is constant, rising revenues, so that will add to our surplus.
In terms of higher rates, are you looking that you might be needing to allocate a little bit more in terms of debt servicing? That's just one of the things that perhaps might be an issue, or is it not an issue?
No, our debt service actually is around only 10% of the budget.
Right, but do you see that moving up because rates are moving up?
No, but it is a small part of the budget. It used to be 90%. Or our debt to GDP ratio, by the way, is very sound.
Right.
It's about 40 and declining. So compare that with other countries where their debt to GDP ratio is in the neighborhood of 100% to 150%. Okay, so we're comfortable.
In terms of keeping the budget deficit, as I believe the target is 3%?
It's right now it's 3. We were forecasting it at 3.2 next year because
Are you on track?
We're on track because of our build program.
Right. I was actually also going to ask you about that. We've seen a lot of the import bill has surged because of that. Is that a right correlation to make the trade deficit because you're bringing in big ticket items?
Yeah, trade deficit is less than 3%. It's very comfortable, and most of it is because of equipment and construction materials. So we're fine.
In terms of federalism, is that on the table for next year? And then have you allocated or earmarked, or at least have a figure in your head how much that's going to cost the government?
I think federalism is a long ways to go. You have to pass legislation. It has to be ratified in a plebiscite next year if this happens. And so it's about maybe 2-3 years.
Very, very quickly here, there's a big typhoon that's headed towards the Philippines. How much money have you allocated towards that?
We always have around 15-20 billion for
pesos
for calamity, and we can augment it if necessary.